Hello, welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to another session of Economy this week, wherein we take important economy related articles from different newspapers and analyze these articles. For this video, I'll be covering the time period from 21st to 27th August 2025, and these are the list of the articles. Along with this, I'll also be covering a bonus article at the end of the session. Now, before I start the discussion, I have two very important announcements to make. The first one, I know a lot of you are preparing for the Civil Services 26 and 27. If you want to ace the examination in the first attempt itself, you need to ensure that you have a comprehensive coverage of the static portion, current approach towards the current affairs. You need correct reading material, the prelims as well as the mains test series. Once you enroll into our courses, which is available at a price of 19,999, all of this will be made available to you. In addition to this, if you use the code IAS English, you will also get an extension of up to 12 months free of cost. Those who are interested to enroll, do check out the details by clicking on the link provided in the description below. The second one, a lot of you keep on asking me for the notes as well as the PPTs that I'm using in these particular sessions. We launched Economy this week, covering the time period from 12th to 18th June. And since then, every week without fail, Thursday, we have been uploading this particular video. Now, the repository of all the videos, along with the PPT, the YouTube video link, as well as the handouts, all of this is available in this Google Sheet. All you need to do is go to the description box for this particular video. There will be a link provided. Click on the link, you will get access to all of this. So download and more importantly, read and update the current affairs. Let's start with the first article, Flexible Inflation Target. Now, what are the important points here? Reserve Bank of India, please understand, implemented the concept of a flexible inflation target starting from 2016. What is a flexible inflation target here? Until 2016, RBI used to follow a concept called as a multiple indicators approach, MIA. Under multiple indicators approach, RBI used to use multiple indicators such as a trade, such as exchange rate, etc., to make monetary policy decisions. But from 2016, RBI implemented a new methodology called as flexible inflation targeting. Under flexible inflation targeting, basically the Reserve Bank of India was given the target by Government of India to maintain the inflation rate exactly at 4%. And what is the 4% target that I'm talking about here? This is basically the headline CPI. Please remember, this is the headline CPI which was given as a target by Government of India for Reserve Bank of India. Of course, whenever these targets are decided, and remember this term now, there is an agreement which has been signed between the government as well as RBI for this Monetary Policy Framework Agreement. I'll repeat the expansion again, Monetary Policy Framework Agreement. There was MPFA signed in 2015. RBI Act of 1934 was amended by Government of India. And then from 2016, after Government of India consulting Reserve Bank of India, government started providing a target for Reserve Bank of India to maintain inflation. And the inflation target that was decided was 4% headline consumer price index, headline CPI. But please understand the next point as well. If you are the RBI governor, you cannot maintain the inflation exactly at 4% at all the points of time. There will be certain flexibility, or there should be certain flexibility, because there are various factors, especially the supply side factors, which are not in your control. For example, the crude oil prices, for example, vegetable prices, for example, supply of cereals in the market, etc. So there are various supply side factors which are not in your control. So that is the reason Reserve Bank of India was given flexibility. How much flexibility? The actual target was 4%, but RBI was asked to maintain exactly at 4%, but with the flexibility of 200 basis points, 200 BPS. Now, what is this 200 BPS? Please remember, 100 BPS will be equivalent to 1 percentage. So 200 BPS will become how much? Equivalent to 2 percentage. So RBI was given the target of 4%, but with the flexibility of 4% plus 2%, 4% minus 2%. So the maximum inflation that RBI can allow it to reach was basically 6%. And the lowest inflation that was given as a target was 2%. These are essentially called as the floor level, 2%, and the ceiling level, 6%. So the threshold was given by Government of India for Reserve Bank of India. Next point. Now, this particular concept of inflation targeting or flexible inflation targeting, it is supposed to be implemented once every 5 years. That is, the term for the FIT is 5 years. Once every 5 years, there has to be a reworking of this. There has to be a discussion associated with this. And for the next 5 years, a new target has to be chosen. Like I said, the flexible inflation targeting came into force from which year? 2016, 2016. So plus 5 years. So in 2021, we completed first round of 5 years of flexible inflation targeting. Now again, we reworked it, we revamped it or had a review and decided there is no need to change anything. So we decided to continue with the same target, that is 4% plus or minus 200 basis points for the next 5 years. And the next 5 years are going to complete in the year 2026. So a couple of more months, that is once you enter into 2026, the Government of India as well as the Reserve Bank of India again will have to have a relook of flexible inflation targeting, and they have to decide whether should we continue with this target, should we restructure, should we change the number, etc. Keep this particular point in mind because most of you are going to write exams in the year 2026. Now, what has RBI done? Reserve Bank of India has very recently published a report. This particular report is of around 70 plus pages. So if you ask me, should I read this particular newspaper or should I read this particular discussion paper because I'm going to write the UPSC examination? My answer will be no. 70 plus pages, not worth it. But what is the essence of this particular paper? Reserve Bank of India now has put 4 questions to the public. Essentially, RBI is asking answer or the viewpoint of the public on 4 questions. And based on the feedback that is received, RBI will have a consultation with Government of India and then decide what should be done in the next round, right, for fixing the flexible inflation targeting. Now, what are the 4 very important questions? First question, Reserve Bank of India has asked a viewpoint, that is the feedback from the public, whether RBI should continue targeting core inflation or headline inflation. That is basically right now, listen to me very carefully. RBI under the flexible inflation targeting, like I said some time ago, targets headline CPI. But there is also criticism regarding this. The criticism is that when you target headline, you consider all the baskets of goods and services under CPI. 299 basket, goods basket or services basket. Now, when you look at some of the items such as food articles as well as the fuel articles, the prices are a lot fluctuating. These are very temporary fluctuating. There is a lot of upward movement as well as the crashes which are observed in the food as well as fuel articles. So the criticism is that rather than using headline inflation, use core inflation. In core inflation, from the same basket, we will remove the food and fuel articles and calculate inflation for the remaining articles. That is basically one feedback that Reserve Bank of India has sought from the public. Second very important question that RBI has asked for the feedback from the public is, should they continue to have a fixed inflation target, that is only let's say 4%, or continue to have this framework that we have implemented in India, that is basically 4% plus or minus 200 basis points. In simple terms, there is a threshold which has been decided. Threshold is 4% is the target, but RBI can allow it to reach maximum 6%, can allow it to fall lowest at 2%. So RBI is now asking the feedback whether they should have a fixed number, that is let's say 4%, or continue to have this kind of a threshold level of 4% plus or minus 200 basis points? Second question. Third very important question. Let's say you decide to have a threshold. You decided to have a threshold, that is plus or minus certain flexibility is provided. Now, what should be the flexibility provided? Should we, let's say hypothetically, should we continue to have a flexibility of 200 basis points on either side of 4%, or should we reduce the flexibility? That is, let's say hypothetically 4% plus or minus 100 basis points. That will reduce the difference between the ceiling as well as the floor level. That is basically the third question which has been asked. And the fourth very important question is, let's say you decide to have not one rate, but rate along with flexibility. That is, let's say 4% plus or minus 200 basis points. This is what the method that we are using now. That is one rate along with flexibility. Now, the rate that you decide, flexibility is done. The question is already asked. The rate that you decide, right now, this should be 4%, more than 4%, or less than 4%. That particular rate, should it be remaining at 4% only? Should it be increased to 5%? Should it be reduced to, let's say, 3%? So even that particular question has been asked by the Reserve Bank of India for viewpoints from the public. That is basically the experts are giving their feedback to Reserve Bank of India regarding what should RBI do under all these particular four areas. Based on the viewpoints, based on the inputs, next year 2026, next round of flexible inflation targeting numbers will be decided by Government of India in consultation with Reserve Bank of India. So these are certain very important points associated with the first article, that is flexible inflation targeting. Now based on this, I've given an MCQ here. Those who want to solve the question, pause the video, solve it. Otherwise, you don't want to solve it, you just want to listen to the explanation, continue, do not pause the video. Consider the following statements regarding the flexible inflation targeting. The inflation target is a core CPI at 4%. No, it is not core CPI, rather it is headline CPI. The RBI Act of 1934 has been amended to implement this. Yes, this is absolutely true. RBI follows multiple indicator approach under the flexible inflation targeting. No. Earlier, it used to follow multiple indicator approach. Today, it doesn't follow the multiple indicator approach. So second statement is true. Only the second statement is true. Right option for this question will be option A. Only one of them is correct. Now, let me go forward. Next article. There is an article which was published by Mint newspaper where they are discussing certain government sources which are giving information to the newspaper saying that Government of India is rethinking joining RCEP. This is a very big news. Government of India is reconsidering joining RCEP. Now, what are the important points? RCEP is basically a group of 15 countries. Remember this. RCEP represents an agreement between a group of 15 countries. The 15 countries essentially are 10 member countries ASEAN. Along with ASEAN, there is China, there is Japan, there is Australia, there is New Zealand, etc. So there are 15 countries which have come together, form a trade agreement, and that is called as the Regional Comprehensive Economic Partnership. Now the discussion regarding RCEP has happened last decade. In the last decade, there was a lot of discussion regarding RCEP. And to begin with, it did not have 15 countries, it had more number of countries. That is, by the time we reached the agreement, there were in fact 16 countries including India. 16 countries including India. But in 2019, when the final rounds of negotiations regarding RCEP were being conducted, Government of India cited certain reasons to withdraw from RCEP. For example, Government of India raised concern regarding New Zealand proposing to export dairy products into India. It raised concern regarding the impact of the agreement on, let's say, the domestic companies, especially MSMEs, on the farming sector. And it also raised concern regarding China's trade with India. And the argument was the trade that is conducted between India and China already favors China. There is a huge trade deficit that India has when trading with China. Now, if you enter into a trade agreement where China is also present, and you will have to lower the barriers, you'll have to lower the restrictions, then the imports from China into India will suddenly balloon. It will skyrocket, and that will further lead to widening of trade deficit, not to forget impact on domestic industries. So, citing multiple reasons, Government of India basically said, I do not want to be party to regional comprehensive economic partnership. But now what has changed? Why is Government of India simply considering rejoining RCEP? Why? What is the logic behind it? The logic, according to various experts, is one, Government of India is worried about what will be the impact of the tariff that have been proposed by government of USA on India's exports. And by the way, these particular tariffs have already kicked in. These have been notified as well as implemented on Indian exports. Huge amount of exports from India, more than $40 billion worth of exports are expected to be affected because of these particular tariffs. So government of India wants to basically reduce the impact of tariff like this. So one, the impact of tariff the government of India wants to reduce. How? Basically start exporting to other countries such as the group of 15 countries under RCEP. Second one is the government of India wants to focus on diversification now. It wants to focus on diversification. Diversification of what? Diversification of exports, diversification of countries, essentially diversifying the export basket as well. So the government is also focused on diversification. Third one, government is now entering into multiple trade agreements, negotiations with other countries within the Asian region itself. For example, in recent times, there have been talks of reviving border trade between India and China. Border trade, right? There is also talk of promoting the trade between India and Japan. The Prime Minister of India is going to visit Japan starting today. So, argument is the government of India is looking at other trading partners within the Asian market itself in order to basically diversify and increase the exports from India so that the impact of the tariffs by the USA government can be minimized. And the fourth very important argument which has been put forward by government of India is that when there are countries, including USA by the way, when there are countries around the world which wants to utilize these kind of policies, or there is a disruption caused because of these particular policies, the whole supply chain gets disrupted. I want to manage this particular supply chain in a better way. I want to reduce the reliance of right India's exports, right, in terms of getting raw material or exporting destination, etc. I want to reduce the disruption that is caused by very few of the countries. So supply chain management, they want to right basically reduce the disruption. So these are some of the reasons which have been cited by government of India to basically, right, again, I'm saying they have not yet started. Officially, nothing has been announced. But these are some of the reasons why it is said that government of India is considering to basically join the negotiations with RCEP countries and right, hold negotiations and become a part of RCEP. But having said so, please understand what were the concerns of government of India earlier, they still hold good. They are still true. For example, if India becomes, let's say, or negotiates a kind of agreement with RCP countries, etc., even today we are worried about the trade with China. We have a very high amount of trade deficit with China. So, can there be any kind of guarantees that can be sought from the other parties, other trading partners, in order to ensure that, no doubt, we will get the benefit by exporting and importing? We will be able to diversify, move away from the American market. But at the same point of time, we will want certain guarantees from the trading partners that they will not be leveraging these to their benefit, which has happened in the past. For example, India ASEAN, right? The trade agreement has been implemented, but the trade exports, that is basically the exports of ASEAN countries into India, have grown much faster compared to Indian exports. As a result of which, the trade deficit that we have with this group of countries also has widened. So can we have certain guarantees in order to protect the domestic industries, farmers, etc.? That you will have to wait and see. This will become one point of discussion when the head of the two countries, that is India as well as the Chinese counterparts, are going to meet in the upcoming days. So this is the second article associated with this. Again, I've given a question. Let's solve it. Consider the following statements regarding the Regional Comprehensive Economic Partnership. It is focused only on trade in goods. This will be a very tricky statement for a lot of you. Why? This is incorrect. It is not just focused only on trade in goods. It is focused on many other aspects of in the trade as well. For example, intellectual property rights, investment, services, etc. Multiple areas are covered under RCEP, not just trading in merchandise. All the members of ASEAN are part of RCEP. Yes, all the members of ASEAN is a group of countries, right? So all the members of ASEAN are part of RCEP. Yes, that is true. India is not a founding member and has joined later in 2024. India is not a founding member is correct. Founding member means a country which was part of the group when the group was actually established. So is India not a founding member? Yes, that is true. But the second part is it has joined later in 2024. No, this is incorrect. India is yet to join RCEP. It is not a member of RCEP. So second statement is true. Right option for the question will be option A. Only one of the statements are correct. The third article, shipping is expected to be provided with infrastructure status. Now, what are the important points here? Please listen to me carefully. Very often in the newspaper, you'll come across a term called as a particular industry is given infrastructure status. What is the meaning of it? What is the importance associated with this? I'll give you one example. In case of India, the cold chain warehousing, cold chain has been given infrastructure status. It has been given infrastructure status. I'll give you one more example. Logistics has been given infrastructure status. What is the meaning of this? Now listen to me carefully. Let's say you want to take a loan. Very simple example, by the way. You want to take a loan. Loan for what? For development of a housing project. Or let's say you want to purchase a home itself. You will go to a bank. You will apply for a loan. Don't you think the bank will provide a loan under housing segment? The banks will provide loan under different segments like this. Let's say, right, you want to purchase a car. You'll apply for a loan. Do you think the bank will give you a loan under housing segment to purchase a car? No, they will provide a loan under vehicle segment only. In the same way, whenever loans are provided by the institutions like this, there is a classification, infrastructure loans. Right? So if you are given a classification of infrastructure or you are classified under infrastructure, your project is classified under infrastructure, in that case only you can be allowed or you are allowed to apply for these kind of loans. So everybody is able to understand why there is basically the importance of allocating an infrastructure status to an industry like this. And not to forget, in case of India, there is a promotion of development of shipbuilding. Right? There is a need to promote and develop shipbuilding in India. A lot of times we are dependent on the ships of other countries in order to conduct trade. And by the way, the trade through sea routes is the favorable or most favored route for conducting trade. More than 90% of the total volume of trade that India does with the rest of the world is essentially done through sea routes only. So the manufacturing of containers, manufacturing of ships, etc., are required if India wants to become a superpower, if India wants to control or have a very high amount of contribution to the global trade. And that is the context wherein this particular classification of shipbuilding or shipping industry comes into picture. So what is the other advantage? Is it just that you will get a loan from a bank? Is that the advantage? No. Very often you will come across the concept of foreign direct investment. You'll come across the word called as foreign direct investment. Now, please understand, whenever you're classified as infrastructure, you're classified under infrastructure, it becomes very easy for you to attract foreign investment as well. And not just this, when you're classified as infrastructure, you can easily borrow from external market as well. And there are multiple financial institutions in India. I'm not talking about scheduled commercial banks. I'm not talking about private sector banks that anyways will provide loans to anybody and everybody who wants to borrow under infrastructure, under housing, provided you meet certain condition. But there are certain specific type of lending institution, dedicated financial institution, India infrastructure financing. Right, so these kind of institutions are there who will provide loans only for, right, the infrastructure development purposes. And it is very much required, if you want to borrow from these kind of institutions, it is very much required that you are classified under infrastructure. So these are certain very important points associated with this. You need to focus on the development of shipping, that's required. Government of India, in fact, it has kept a target. What is the target? It wants to become one of the fifth largest shipping countries in the world by 2047. That is 100 years of independence. We want to become the fifth largest country in terms of shipping, that is in terms of shipbuilding, owning the number of ships, etc. So that is the target which has been kept by government of India, right? So according to that, the announcement might be done by the government very soon. Next article, Jan Vishwas 2.0. Now, what is this Jan Vishwas 2.0? Why are we calling this at 2.0? Right? And what are the important points? Let's go one by one. Point number one. In case of India, multiple laws have been implemented which are enforced. Enforced means implemented by different authorities over a period of time. Hundreds of laws have been implemented. Under hundreds of laws, there are thousands of provisions. Now, please do let me know in the comment section, by the way, later when you watch the video. How many of you know that there is a provision under one of the laws in India where it is basically a criminal offense for a person to milk the cow on the road? It is an offense, by the way, and you can be penalized. And there is also, right, one provision which simply says if you do not provide a healthy lifestyle, that is walking, etc., for your dog, that is also an offense. So the point I'm trying to make is, over a period of time, we have implemented multiple laws which are being implemented through different ministries, and under these laws there are multiple provisions, and these particular provisions, mind you, right, might be very strict in nature, might not be required in the current situation. And the government of India over a period of time has realized that, and it basically has, back in the year 2023, introduced a bill called as Jan Vishwas, which is an act today. Right? That's the reason the current one is called as a Jan Vishwas 2.0. Earlier, what the government of India did was they identified multiple provisions which do not make sense today. Again, when I say which doesn't make sense, I'm talking in the context of the severity of punishment that is associated with these provisions. Many of these particular provisions will simply treat a minor mistake that you do as a criminal offense. You are sent to jail because of it. And don't you think in such cases, most of the times the provisions are not enforced? Most of the times these are not enforced. But sometimes selectively the states can use this to enforce, can create troubles for certain people, certain sections of the society, etc. So government of India, what it is doing is essentially, one, they want to reduce the punishment that is provided under this, right? Basically rationalize these particular provisions, or, right, let's say the laws. That is the one. Second one, with rationalization, what is the outcome? It will promote ease of living. And it will also promote ease of doing business. So ease of living as well as ease of doing business. Third one, by basically reducing the impact, or by changing the provisions, decriminalizing, etc., the selective application which can be done by the state, the selective application now can be addressed. And the fourth one, let's say in multiple instances, very minor infringements, very minor mistakes that you have done, issues that arise, you are booked under these particular provisions. As a result of which, the cases which are pending in the courts will keep on increasing. Already, we are saying there is a very high burden on the judiciary. Crores of cases are pending in India. Now, even these petty cases are very, very right. Let's say these kind of cases where very minor issues are there, even these will get added to the judiciary burden. Right. So, considering all of this, the government of India in the first round, that is basically the Jan Vishwas 2023 bill, identified more than 100 provisions. In fact, the actual number is 183 provisions, and decriminalized these particular provisions. Now, the second round of Jan Vishwas is being conducted. What does the second round mean here? Jan Vishwas Bill 2025. Very simple. Jan Vishwas Bill 2025 has been introduced, and once it will be passed by both the houses and given the assent by the president, essentially the government of India will be making relaxations in 355 provisions. Please remember, 355 provisions. As a result of making changes in these 355 provisions, again the argument is a lot of them will promote ease of living, EOL, ease of living. That is, I think around the 55 plus 67, around 67 will promote ease of living, and around 288 will be done in order to promote ease of doing business. Right, so this is essentially the argument under the concept of Jan Vishwas 2.0. Now, apart from this, you also need to remember one more very important point. Multiple ministries, laws are being covered under this. Should you memorize all those laws? Not required. But as a result of this, what will happen is a lot of these instances where until now these were treated as criminal offenses, now these will not be treated as criminal offenses. In lot of cases, the government is simply saying, we are going to issue a warning. We will simply issue an warning. In lot of these cases, rather than sending into jail, we will have monetary penalties in particular range. And these will be implemented in a graded manner. That is, the first mistake or first violation, it will be this much. Second violation, it will be this much, etc. So this is essentially the concept associated with Jan Vishwas 2.0. Right, one more set of reforms which are being implemented by the government essentially to promote ease of doing business as well as ease of living in India. Now, next article, important one. India to tap e-commerce sites data to inflation gauge revamp. In the current affairs, there is a lot of discussion associated with inflation. Right, the government of India has already announced that we are going to change the base year. We are going to change the base year for calculation of consumer price index. Starting next year, we are going to change the base year. But in addition to change in the base year, now the government of India simply says, we are going to change how the data is also collected. How so? Now, please tell me, compared to last decade, in this decade, is it fair to say how we purchase goods and services, methodology has changed? What do you mean by methodology? A lot of you, or a lot of your households, in fact, earlier, the way we used to purchase the goods and services was mostly a traditional method. We used to go to market. We used to run from one shop to the next shop. And finally, from one shop, we would end up purchasing. And that data would be collected by the government anyways to calculate CPI. But in the last one decade, is it okay if I say more and more households and more percentage of the expenditure is being done through e-commerce websites? Correct? More and more households have adopted purchasing these goods online, and more amount we are spending on, right, let's say purchasing these goods and services online. So don't you think when we calculate what is the inflation, that is retail inflation, CPI, if you do not account for the prices that we pay when we purchase the goods and services through e-commerce website, the collection of data will not be efficient. The data that we have collected from the markets, right, that is in the, let's say, physical markets, is not the complete representation of the total expenditure done by me, done by you. Lot of us purchase the goods and services using e-commerce websites. So now the government of India, that is Ministry of Statistics and Program Implementation, has announced that with more than 270 million people in India using e-commerce to purchase goods and services, with more and more expenditure by the households being done in e-commerce services, we will install a mechanism where the expenditure that the households will do in the e-commerce websites will also be accounted in data collection. It will be used to calculate inflation. This is an update. Please be very, very careful. Can be asked in the preliminary examination. Now, finally, like I said, I'll be discussing one bonus article. What is a bonus article? Last week, if you remember, and if you have not yet seen, please do watch it. Last week, I covered an article that was basically discussing the directive issued by the union government regarding the public distribution system. That is, the government of India has issued an order to the states. It has given certain list of the beneficiaries. The state is supposed to look into this particular list and identify the beneficiaries who are not supposed to be covered. Because like I said earlier, there is a need to revamp this particular list. There are certain errors in the list. Certain population which is not supposed to be covered, it is present in the list. Certain population which is yet to be covered is waiting in line because we do not have sufficient numbers to cover this particular population. So that is the reason now there is an update. That's the reason I said center has issued a directive to the state to look into this particular list, and if any beneficiary is supposed to be removed, let's remove them. As a consequence of this kind of an order, what has happened? Please have a look at this. The government of India on one side is promoting farmer producer organizations, FPO. All of you heard of this? In fact, government of India had a scheme under which the government of India wanted to ensure that 10,000 FPOs would be registered. And it has in fact reached that particular target. It has already achieved the target. Now, as a consequence, unintended consequence by the way, as a consequence of the order issued by the government earlier, there is an effect which was not expected. What is the effect I'm talking about? And that's an update by the way. These FPOs are basically the structures or organizations which are registered. And a lot of farmers are members, are board members under these particular FPOs. Now, as a result of this kind of an order which has been issued by the government, many of these farmers who are board members in these FPOs, they are willing to resign. They are coming forward to resign from these particular positions. Reason being, the government simply says you are a board member and lot of people from your family itself are covered under NFSA, that is under the public distribution system. You are identified as priority household members and you are getting benefits. So how can that happen? You are a board member and you are getting PHH. That is, you are getting benefits being covered as a priority household. So worried about this kind of a, let's say, the removal from the list of the beneficiaries, many of these farmers who are part of FPOs, they are willing to resign from the board of FPOs. This is basically one update, and going forward, I'm pretty sure there'll be more updates associated with this order issued by the government. So have a look at this. Is revamping of the beneficiary list needed? Of course, yes. But when you go for revamping of the beneficiary list, these kind of unintended consequences will also arise. We need to address these particular problems. So these are the various articles and the concepts I wanted to discuss in this video covering the 20th to 27th of August 2025. If you like this initiative, do not forget to hit the like button. If you are yet to join our YouTube channel, kindly do it right now. Thank you. Have a great day.